June 18th. NVIDIA bounces almost 3% and closes at $210.69. But on the same day, three headlines land and they all say the same thing. Amazon is in talks to sell its AI chips to outside customers. Google, analysts say, is copying NVIDIA's model to build a rival silicon business. Qualcomm is lining up $10 billion to challenge the leader. And the analysts? On the same day, one firm cuts its rating, another reaffirms strong buy. Three headlines, two opposite calls, a stock that bounces. Out of all this, what do you actually need to understand? I'm Zora. Every week, I take one CATA report and show it at work. Today, NVIDIA. The problem here isn't a lack of information, it's too much of it. On one side, fear. Everyone wants NVIDIA's throne, and the market is selling on the competition closing in. On the other side, the numbers, which say the opposite. To really read the situation, you'd have to cross four layers: the competitive news, the fundamentals, the technical picture, and the memory of what happened the other times the stock looked like this. Three sources, four different layers. Here's what CATA compressed into a single read. Start with the numbers, because they're the safety net. NVIDIA trades at about 32 times earnings. Sounds expensive, but against expected growth, the price-to-growth ratio drops below 0.3. For a market leader, that's still cheap. Net margin is close to 63%. Return on equity tops 110%. Debt is almost non-existent. The profit machine today is running at full speed. But the market isn't selling the present. It's selling the fear of the future. On the technical side, the picture has no direction. The close puts the stock just above its 20 and 50-day averages, but momentum is lukewarm. Relative strength sits around 50. The trend oscillator is pressed low. This is a sideways market, not a restart. And here's where memory comes in, the part ordinary analysis doesn't have. The last time the setup looked like this, relative strength around 50 and the oscillator near 34, above the 200-day average, was November 12th. Over the next 2 weeks, the stock dropped almost 4%, with a dip as far as 12%. But there's the opposite case too. October 16th, a similar configuration, closed up 12% over 10 sessions. Same picture, two different outcomes. That's why the read doesn't force a direction. And now the most important part, the one that tells you whether a system can be trusted. On June 9th, CATA's read pointed to $218. It was too optimistic. The stock stalled above 211, more than 3 percentage points short of that target. What it underweighted was exactly the competitive pressure, a slow erosion of the scarcity premium rather than a single negative blow. The system records it and says so. It doesn't rewrite history. Translated into levels, the zone to watch sits between $208 and $199 on the downside and $216 on the upside. The floor defended in early June around $199 is the structural reference. As long as it holds, the constructive read has a base. The synthesis, a stock in unstable equilibrium. Exceptional fundamentals as a net, a competitive narrative weighing on sentiment, a technical picture without direction. For the coming weeks, the read stays neutral, with a constructive shade. What would flip it is a decisive close below 199 on rising volume, which would open the way toward 194. On August 26th, the next earnings report will have to defend evaluation on its own, against the competition closing in. Let's stop for a second. All that noise we opened with, 3 headlines, 2 opposite calls, 4 layers of analysis, you just watched it reduced to a single read, with precise levels and even the admission of a mistake. No analyst wrote this in an hour. CATA produced it, and it's one of many reports today across different assets in 2 languages. The read I told you is the readable layer. Underneath runs an engine that cross-references data, memory, and context. The system scales, and Office doesn't. One thing, said plainly, this is not a recommendation. CATA does not tell you what to buy or sell. It's a configurable technical synthesis, and whoever reads it remains the only one who decides. We give the context. The decision stays yours. That was this week's report on NVIDIA. A different asset every week, the same synthesis. Today's report, updated, is on CATA. Link in the description. I'm Zora. Until the next episode.